Hey, this is Matt from InvestiQuant. Today is Friday, October 14, 2022. Yesterday was quite a day. 196 points of range in the S&P, and you knew if you were in the IQ Meta auto trading program or the combo or our new select program, you caught the entire move. It was a giant day. If you're not catching those types of moves in your own account and you need some help with that, we're doing a webinar next Wednesday, and we'll talk about how you can participate in our auto trading programs and you can catch some of the days like yesterday, which I'll be real with you, that is not something that happens often. We do not see moves like that, but we caught it. And the auto trading programs did exactly what they were designed to do yesterday, and you can participate in those and capture those types of moves as well for yourself. So if that's something you're interested in, next Wednesday we're going to have a webinar talking about that. You can sign up at the link below, investiquant.com/webinar, and you can join us for that. But for today's Daily IQ, we're going to be talking or taking a look at what has happened historically following a giant move to the upside. So let me go ahead and get this set up. All four instruments here are selected. The setup's based upon entering long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. We are currently trading up a little bit in the overnight session as of the time of this recording. I'm going to add that to the test by going opening filters, gap direction, gap up. Then I'm going to go to the price patterns library. And I'm going to describe yesterday's day using a pivot point. So in the active today, we're going to come down to location of the last close, and I'm going to click here, close above the R3 pivot point. So I've selected that. Next thing I'm going to do is go to the indicators library. I'm going to use a 200-day simple moving average. We closed below a 200-day simple moving average yesterday, and then I'm going to click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you are gapping up and the prior session closed above the R3 pivot but below a 200-day simple moving average. Historically, just 23 samples here in the S&P, 21 in the NASDAQ, 26 in the Dow, 21 in the Russell. Win rates on these coming in 39% of the S&P samples here closed above the opening print. For the NASDAQ, it's 52%. For the Dow, 46%. For the Russell, 38%. Average win versus average loss on this one, the average loss is larger for the S&P. That's also the case here in the NASDAQ. That is the case in the Dow, and that is the case in the Russell. So all four of them have larger average moves to the downside following that pattern. Win rates are kind of mixed. S&P and Russell a little bit weak. Sample sizes are a little light here. This pattern doesn't happen all that often. A close above R3 is a pretty sizable move to the upside, and that can be via a gap up that continues higher, or like we saw yesterday, where you open lower and you just steamroll the upside all day long. So that is a close above the R3 pivot with a gap up when below a 200-day simple moving average. Hopefully you found that helpful. Good luck today. We will